you eat?
I had a sandwich.
Oh, you're on the line?
Hey, what's going on, guys? Hopefully this is working right. Is this working right? I get rid of this. Let's go here. I think that is it right there. So I can see my thing here. Hold on. What's up, fellas? What's up, family, I should say? Let me make sure I got this going on right. I feel like there's something I'm missing. There it is. What's up? What's up? What's going on, guys? What happened here? That title did not show up. I forgot to put the title in there. I forgot to put the title in the thing. What's going on, family? Happy Monday to you. What can I do there? Can I do this? No, right now. Let's see if I can change that right now. Will that work? Now. It did work. Wow. Okay. Well, good. What's going on, guys? Let me change this, put the dark theme on. There you go. So what is going on, guys? Everybody having a good day today, I hope? Are you on Instagram? Are you talking Trent? Are you talking about me? Am I on Instagram? I am. It's a Siege_Miller on Instagram. Win Mullet, what's going on, bro? Thank you, Win Mullet. I appreciate that, man. Good to see you. TJ Jackson is in the building. What's going on? What's going on, my friend? What's going on with the oil? I don't know. I haven't read anything about it. I know BK did a stream. I believe he did a stream about it. And I think I saw a tweet from Cryptopolis. Give me a sandwich. All right, so everything should be good now. Yeah, Instagram, you guys can follow me on Instagram if you like, CEEJ_Miller. Jet Digital is in the building. Oil is tanking. How about that? That is very, very interesting. Oil is $1 a barrel? Whoa. Yeah, that can't be good, Michael O2. That can't be good, right? It was trading negative. Whoa. Yeah, that's a little crazy. Oil is 50 cents a barrel right now. Wow. Guys, now that I think about it, I'm wondering if this particular article had been covered already. Crypto dollars and the evolution of Eurodollar banking. I had a chance to think about it. I was on, gosh, I've been on Zoom calls for about 2.5 hours now. And I was thinking about that during one of the Zoom calls. And I'm thinking, this might have been covered already, but I'm going to go over it anyway. I think it was an interesting read. It's a long read, though. It definitely is a long read. So, guys, tell me the deal. Anybody know if we can buy solo tokens on the Sum app? Does anybody know that for sure? Did anybody know that for sure? I think so. DD1 is in the building. What's going on, DD1? Minus, wow, man. Negative is crazy. DD1 says, yep. So you can buy solo tokens with the Sum app. That's interesting, right? So I don't have to mess around with in exchanges or anything like that. I wish I knew how to do that. I have not done it yet. DD1, have you done that? Because just like Kava, I would certainly like to support the Solo token and its platform, being that these things are taking advantage of the XRP ledger. But DD1, have you used that? Like I put the XRP on there on the Sum app, but I haven't done anything else besides that. But that would be cool if you could do that. What's Solo trading for nowadays anyway? Let's see something. Let me see. So James Shepard is in the building. What's going on, James? Let's see if Solo is on Live Coin Watch. There it is, Sologenic. 61 million market cap. Volume is 2.6 million. 32 cents is the all-time high, and it's currently trading at what price? 21 cents. $5 for $1 for some Solo, huh? What do you guys think about Solo? You guys any thoughts on Solo? All-time high was 32 cents, so that's a good buy. It's a good buy then, right? Where am I at? Every time I leave, I get where do I need to go? That's not it. $0.22. Yeah, I'll have a look now, Siege. Okay, cool. All good. Waiting to retire, says James Shepard. I hear that, man. Trent Lehman. I have a friend of mine. Last name was Lehman. How can I get Stella on my ledger off of Coinbase? Well, on my ledger off of Coinbase. Well, just the same way you would put any other token on your ledger. Have you put other tokens on the ledger, Nano? I've never done anything with Stellar, so yeah. So when Mullet is like, I'm not sure if Ledger supports Stellar Lumens. So Trent, when Mullet answered your question, it probably looks like it's going to be Trezor would be the best place. So TJ Jackson says Mariano tweeted that the plunge in oil could be good for the stock market since somehow. All right, crazy times. Well, I guess we'll see. Trent, good to see you in the stream, man. It's just your first time in the stream, Trent. Can't buy it, but can send it to some. So you can't buy it there. You can send it. So yeah, that's not trading it. I mean, I don't know. The article said that you could trade it there. Oh, very cool. Well, welcome to the stream, brother. Definitely appreciate you being here without question, my friend. Yeah, definitely a good idea to put the amount of digital assets you have on the stream, my friend, just as a heads up, just because, you know, the bad guys are always watching and they're always paying attention. You don't want to get yourself exposed or get yourself in trouble in any way. So Solo future top 10 coin buy Saturn Net 1. Yeah, I believe so. I wish there was a simpler way to be able to purchase the Solo token. Let's see, where they got them listed right now. Coinfield, right? And Coinfield is not available to the US, right? Coinfield is not available for US investors, right? That's just what I'm being told. Yeah, so trading it. Oh yeah, no worries, brother. Absolutely. No worries, Trent. No worries at all, man. When you click add account, it's not in the catalog. So I don't know if it's just like XRP, then it's not, they don't support it yet. So I don't know if it falls under the ERC20 thing or not. I honestly, when Mullet, I don't know if Stellar Lumen is an ERC20 token. I don't think so, but I don't know. So that's what it is. You exchange your XRP for Solo. Gotcha. So you use your XRP, you trade your XRP for Solo on the Sum app. Gotcha. Gotcha. Yep. Yeah, that makes sense. I don't know, maybe $50 to $100 of XRP, put it on the Sum app and get yourself, I may get myself $50 to $100 worth of Solo just to kind of support that platform. VPNs are a great thing, I got to tell you that. But I do believe that CoinFill is not available for US, things. And so I don't know how the KYC and the AML would work on CoinFill. How in depth does it go? Yeah, absolutely. Thank you, Windmill. I appreciate that. Appreciate that big time, brother. So, I mean, so that's the deal. This article is a really, 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 really great read. It really is a great, great, great read. But it's rather lengthy. But I got to tell you, I am a little taken aback by the oil dropping that much. And Michael Otu says it'll be back up to $300 by Christmas. But is it really trading for 50 cents? I hear you, D. Daniels. I hear you, brother. I hear you. I hope you're right, man. You got some of that Stellar Lumens. I hope you're right. Stellar Lumens will store on Ledger. Okay, cool. Is it really trading for less than $1 right now per barrel? And can one go out and buy some oil, something? How does one purchase oil? Does anyone know? Anybody know that? I don't know it. I really don't know it. So let me share the screen and then go over this article with you guys a little bit. Add the app first. Okay, you must be Storm Ledger. Add the app first. Wish Solo had oil stocks up now. I would buy the oil right now. Oh, yeah, that's right. So what is the deal with, how do you get to that exchange with Sologenic? I don't even know how you do that. Anybody know how you get to the Sologenic platform? Swayze, what's going on, my friend? Good to see you, bro. Anybody know how you get to the Sologenic platform? Digital, how do you buy? Like real talk, yeah. Like how do you get on the Sologenic platform? I don't even know. Anybody know? I bet if you YouTubed it, if you searched how to use Sologenic platform, it would be on YouTube. Solo not available in the US, I thought. And I'm thinking, yeah, I don't know, Wimmo. That's an interesting question. But if you have the Sum app and you can trade your XRP for Solo, we'll have to figure out how to do it. So let me share the screen here. So this I find to be a very, 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 very interesting article. Crypto Dollars and the Evolution of Eurodollar Banking by Max Bronstein. I'm sure this has probably been covered before. Let me go over the overview real quick, then I'll come back. While Bitcoin is rapidly assimilating into the global monetary picture, the dollar is unequivocally the world's reserve currency, given its dominance in world trade and the scale of the global demand that exists for dollar-denominated debt. Furthermore, there is a massive supply-demand imbalance, a supply-demand imbalance in the dollar market today, particularly exacerbated by foreign entities who need dollar liquidity to service their debts and to trade with other countries. Crypto dollars, namely stablecoins and synthetic dollars created through the derivatives contract, are uniquely positioned to help service the world's dollar demand and will likely see immense growth in market capitalization as the world looks for easier and more programmable ways of storing, transacting, and financing in dollars. For a technology lauded by enthusiasts as a way to escape the dollar, cryptocurrency might actually do more in the near term to strengthen the dollar rather than to weaken it. In this paper, we explain why. Isn't that interesting? Max Bronstein and A.V. Feldman. Yeah, what do you think about that? Do I pause to stare? What's the difference between pausing it and sharing it? Let me see something. Okay, that doesn't do any good. Pause, share, same thing. Let me see something. Pause. And if I do this, I'm still not here, so that doesn't do any good. Okay, I was just curious how that worked. Stop the share, minimize. So that's interesting. They're saying that the digital assets in the advent of things like stable coins and synthetic digital dollars might actually help the US dollar. Isn't that interesting? I'm really curious to kind of hear about that point of view. Sologenic.com and coinfield.com. So can't get sold through some. That's what TJ Jackson, that's what DD1 believes to be correct. But again, I haven't used the Sum app other than to put some XRP on there. But other than that, I have not used the Sum app. So I don't know. I really don't know. But I do know, just like I had, what, $100, $200 worth of Kava, have $100, $200 worth of Solo, just to kind of support the platform, So guys, that looks like a very, very interesting article. Any of you guys seen that before? I do want to cover it, but it is really a very long read. Good to hear you with some new content. Keep up the good work, brother. Thank you, Swayze. I appreciate that, brother. I appreciate you being here as well. I know somebody's going to go to sologenic.com and figure it out. But my understanding is Coinfield in Canada, but it wasn't available for US investors. Coinfield. What you can do with the Sum app is, I guess, another totally different thing. I don't know. We'll have to figure that out. DD1, we'll have to figure that out, my friend. DD1, you're in the States, right? Jay Korn. What's up, Windmill? What's up, Jay Korn? How are you, bro? Or I should say, how are you, my friend? So that's an interesting article. I do want to cover that. Listen, strengthen the dollar. The digital assets can strengthen the US dollar. That's an interesting, definitely an interesting read, and want to learn more about that. So let me do this again. Let me share the screen. Let me do this again. And let's look at this article one more time. So, okay, so it talks about the dollar's ascent. We don't need to know about that. We already know. The dollar milkshake theory, popularized by Brent Johnson of Santiago Capital. The theory states that since the dollar is far and away the strongest and most demanded world currency, the flood of liquidity that was created by central banks starting in 2008 will inevitably be sucked up by the dollar, by the US dollar, and the US economy. The core of the argument is that a global marketplace renders the sources of liquidity irrelevant. In the end, liquidity will always make its way to its most productive use, to the place where that liquidity generates the highest return. In this way, the dollar and the US economy are acting like a large milkshake straw to which the world's liquidity is currently being sucked up and reallocated. Okay. All right. To accept this theory, one must believe that the dollar is indeed the world's most dominant currency. To convince yourself of the dollar's superiority, let's examine the most important demand inputs. Well, I think we know that already, so I'm not going to go through that. We know how strong the dollar is. We know that the U.S. economy is a much stronger economy than most of its global peers. U.S. has become home to most of the wealth generated by the recent secular growth period fueled by software and computing innovation. In fact, you can confirm by looking at the deviation between the S&P 500 and all other global indices of the last 30 years. Cool, great diagram. Okay, that's good. Lastly, most important, the world's debt is by and large denominated in US dollars, with nearly 60 trillion in dollar-denominated debt globally. There is immense demand to service dollar debt. When it comes to borrowers outside the United States, the dollar debt burden of foreign entities reached $12.07, 12 trillion, reached 12 trillion in Q3 of 2019, according to the Bank of International Settlements. While rates were just recently moved to 0%, an annual interest rate of 1.5, the rate we just had a week ago, generates 1 trillion in annual US dollar buying demand since borrowing the USD. So the borrowers effectively short dollars, meaning they have to buy back the principal and pay down the interest with US dollars. Okay, got that. Really good stuff here. But I want to look at the digital assets. So alongside ubiquitous use of dollars to purchase oil within the petrodollar system, the need to hold USD to service debt is one of the largest drivers of dollar demand. Okay, according to IMF, global central banks hold around 6.75 trillion in dollar claims. Okay, good. All right, so let me see. Over time, this culminates in a global short squeeze on the dollar. Over time, all of this culminates in a global short squeeze on the dollar. Okay. Oh, by the way, interesting side note is my business partner today mentioned it was on a JP Morgan call, and which I thought was interesting. But an interesting thing that he said as well was he mentioned the phrase "New World Order," which I found to be very, very fascinating. I've never heard. I don't think he's in the digital asset space, but I thought that interesting that he mentioned that, being that he does frequently get on the phone. On these conference things with the people from Goldman Sachs, people from JP Morgan, New World Order. So interesting. So let me read this, and then I'm going to go into enter crypto dollars. Now, we don't have a crystal ball for the future of global order, so the rest of this discussion will focus on the world's immediate demand for US dollars, how that demand is serviced, and how those services might change over time. This demand spans the entire spectrum of economic actors, from workers in developing countries to the world's largest central banks. Everyone wants dollars, in parentheses, needs dollars. And getting access to the dollar isn't always easy. it usually involves obstacles imposed by either the United States government or foreign governments enforcing capital controls. Just remember right now, what we are doing is what we are doing. What the Fed is doing is what we are doing. But the global demand for the US dollar as a whole is still an issue, right? So getting access to the dollar isn't always easy. I already read that. US governments are foreign. So with greater debt deflation abroad and geopolitical tensions, there's a sizable amount of pent up demand for more seamless dollar distribution sources, or the pent up demand for liquidity, in so many words. So enter crypto dollars. As we'll discuss, it's very likely that growth for cryptocurrencies in the short term is fueled by global economic actors using them as rails to access the dollar, rather than demand for the dominant underlying assets, Bitcoin and Ether, as an example. So Eurodollars and the shadow banking system. So I didn't even know there was the shadow banking. I think I have heard Cryptopolis mention that before. So to understand the importance of cryptocurrencies as a conduit to access and move around dollars, it's important to first lay out how dollars move throughout the world today. More specifically, how dollars move around outside of the US financial system, which I believe to be really, really key. There are many, many pieces of infrastructure that encompass offshore USD banking, but this piece will focus on two elements: the shadow banking system and Eurodollars. The shadow banking system involves what its name implies: the facilitation of banking services, primarily the creation of credit outside the realm of a regulated financial system. Despite the ominous name, shadow banking isn't all that sinister. The shadow refers more to the general lack of insight and transparency than to illusions of illegality. Okay. Like traditional banks, entities in the shadow banking system issue credit to counterparties who want liquidity, with the main difference being that they lend against securities rather than commercial deposits. Using securities as collateral dramatically expands the total available collateral as the market sizes of corporate debt and federal government debt far exceed the total size of commercial bank deposits. So in fact, the ratio of corporate debt and federal debt relative to total commercial bank deposits is 2.26 to 1. Another great diagram here of US corporate and public debt over commercial bank deposits. Good job, guys. Good job. All right, so since shadow banks aren't lending against commercial deposits, they're not beholden to the Fed's liquidity and capital requirements, giving them the leeway to use more leverage than a traditional bank. Coupled with the fact that the collateral base against which that can lend is also larger. The shadow banking system has become a massive source of dollar funding in the world. The growth of the shadow banking sector took off in the early 2000s and reached a climax in 2007 with an estimated $60 trillion in assets. Since then, it's been estimated that the system has shrunk in size, but the innate lack of visibility into the markets make it hard to size with precision. At the high end of the range, the Financial Stability Board has estimated a market size of nearly 100 trillion in 2016. Given the size and liquidity of the shadow banking system, it serves as a good barometer for how much demand there is for the US dollar. The primary use of the shadow banking system is to access dollar liquidity, and the sustained growth of the system shows that dollar demand is steadily increasing. According to the SSB, the Financial Stability Board, the shadow banking system's OFIs was the fastest growing in terms of financial assets held. Very, very, very interesting. So the Financial Stability Board, again, they are on top of things and they are monitoring things, and they are very, 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 very aware of what the digital assets can do in this challenge right now, overall global challenge of illiquidity. So I think it's really, really important to note that too as well. So what is this? High liquidity, liquid assets. We don't need that. The repo market. All right, so for context, repo markets are a massive source of dollar funding where financial institutions can collateralize securities, more specifically, high quality liquid assets to get short-term loans, the repo market, right? The repo market is crucial to capital markets because it provides a cheaper and more efficient way for financial institutions to get access. Yeah, to dollar liquidity relative to borrowing for commercial banks. Well, we all know what's been happening in the repo market as of late. So obviously there is a huge, huge lack of liquidity. In theory, greater liquidity acts as a lubricant, enabling market participants to more efficiently engage in price discovery, settle transactions quicker, and collateralize derivative exposure. So I don't want to read about the repo market. On to concept number 2, which is the euro dollar. Euro dollars are dollar-like liabilities that are issued by entities outside of the United States, which includes, you guessed it, shadow banks. Euro dollars can also mean dollars held by United States regulated entities located in foreign countries. For example, when Banco Santander, Credit Suisse, or Bank of Cairo issue dollar loans or store dollar deposits, they are considered to be dealing in euro dollars. Euro dollars play the critical role of allowing non-United States entities to bank in the dollar without having to deal directly with the Fed or commercial banks. Okay. Again, a lot to read here. So given the size of the euro dollars deposits, it's quite easy to see how much foreign entities actually want the dollar. According to the BIS, there were 4.5 trillion in offshore dollar deposits. Whoa. By the start of Q4 of 2016, nearly 33% of all M2 money stock at the time. Okay. All right. The system has gotten so large and liquid that derivatives on Eurodollar lending rates have become the de facto way for global investors to speculate on the hedge changes in the Fed fund rates. The rampant demand for dollar exposure has catapulted Eurodollar derivatives to be the largest products traded on the CME by volume and total open interest. So we don't need to go into the dollar and weaponization. We've heard that over and over and over again. This is why China and Russia are having major challenge with the dollar being the world's reserve currency. Okay. On the other side of this issue is political in nature. A strong dollar gives the U.S. a great deal of leverage. Without access to dollar financing, people and governments lose the ability to freely trade with the rest of the world and are forced to incur high transaction costs trying to convert assets between weaker currencies. And again, the Donald, President of the United States, knows and is aware of the leverage, right? He knows and is aware of this leverage. And I think that's important to understand throughout history. I don't want to go through that. Oh, SWIFT payments. The United States has begun imposing sanctions through SWIFT, right? So we know that already. Trump has escalated economic warfare to never before seen levels. How about that? With sanctions being imposed on Russia, Iran, North Korea, and Venezuela, alongside thousands of other economic actors. The U.S. has also begun imposing sanctions through the SWIFT payment system in a linchpin in global trade today. Yeah, so we know about that. We know about the weaponization. These things are cool. What a good article. Great deal. Good job, guys. Swapping the dollar reserve for gold. The relative value of the dollar continues to grow stronger. Okay, perfect. All right. Dollar 2.0. There's a massive supply-demand imbalance in the dollar market today, driven in large part by foreign entities without access to the financial system. Okay. So where do they go? So here's the thing that I want to point out. The world increasingly needs dollars to trade and to service massive debt payments, but governments have strong incentives to stymie dollar flows. There's currently a strong worldwide demand for dollars, but it's difficult for individuals to source these dollars. So where do they go? Now they can turn to networks like Bitcoin and Ethereum, which enable novel ways to acquire dollar exposure that are natively digital, globally accessible, and relatively more seizure resistant. Furthermore, financial services and networks built on top of these crypto dollars give them global distribution and make holding them competitive traditional fiat methods. In a world searching for more free access to capital, crypto dollars are a unique solution that helps service a lot of this pent-up demand. As such, stable coins and crypto-backed synthetic dollars should see massive near-term growth as the world scrambles for dollar exposure. And this is the deal that I think is most important. The crypto-backed, quote unquote, synthetic dollars. Remember the diagram I showed you guys with the AIB, the AIIB, HSBC. Crypto-backed synthetic dollars. Okay. Broadly speaking, we can group the different types of crypto dollars into 3 buckets, 2 of which are fungible stablecoins: centralized dollar-backed currencies, decentralized collateral-backed currencies. I think we all know what that is, and derivative-backed synthetic dollars. So it goes over stable coins. We get that. It goes over. Okay, these stablecoins were able to gain such traction for a number of reasons. Their digital nature makes it easy to issue and send them around the world at low cost. Existing exchange infrastructure already had a network effect of users. A new class of financial services was created so that stablecoins could borrow, be lent, and used as derivatives collateral. Setting up a crypto wallet to send and receive stablecoins is far easier than setting up a bank account, especially for entities outside of the US. Similarly, a new breed of blockchain-based financial services has created incentives to convert traditional dollars to crypto dollars. Yes, they have. For more than just trading. The main incentive unequivocally being dollar yield. Crypto dollars can be lent to money market protocols like Compound, lent to exchanges like DY/DX, and then used in peer-to-peer payment applications like Dharma, all while still earning a yield. Shout out to Celsius Network, the best of them all, in my opinion. Stablecoin yields have historically been multiples higher than the Fed's fund rate. This is the thing that I think is so important. I'm going to stop here. Stablecoins yields have historically been multiples higher than the Fed funds rate, with USDC yields hovering between 4 and 10% APR for most of 2019. All right, guys, let me stop the share. Let me do this and go here. Guys, you get that? That is a very massive statement. The yield in the digital asset space, which is your dollars and stablecoin, the yields have been significantly better, 4 to 10%. And what I'm suggesting to you, just like this guy and gal, I think AV might be a gal, I don't know, but what those people who wrote this article are suggesting as well, is that we know it, they know it. They know it. And the word is going to continue to get out. And so this article is really about, it's still that demand for the dollar, but it's another way to provide it. It's another way to provide it. And that's the space that we're moving in. It's not just DeFi. I get DeFi is cool. But when the world realizes they can, when mom and pop realizes they can take their $1,000 and put it in the stable coin into the digital asset space, which is what Alex Mashinsky has been promoting and promoting and promoting and promoting and promoting, is the way to get more people into this space. And they're seeing 6, 7, 8, 9% APR. It's hard to argue with that. It's hard to argue with that. So we saw the article the other day about, was it the WEF or was it FSOC? Who was wanting to put these, was it the, put this greater restriction, you know, this range from greater restriction to banning stable coins? Who was that? What entity was that? Anybody remember? I don't remember. What entity, what organization, if you will, was wanting, was the G20, I think it was the G20 people, were suggesting to the central banks, I believe, suggesting to someone, I forget, but they had a range from huge higher restrictions on CBDCs, central bank digital currencies, to like a ban, right? Central bank digital currencies, right? Like almost a ban. So this article, I think, is a great read, and I will continue on because they're pointing to the fact, you know, I don't know who wrote it. Maybe at the end, I'm going to find out that, you know, these two people are from Compound or from Dharma or something. I don't know. But if we know, if they know and we know about the people writing this article, and we know that value that people are looking to get more, in other words, they want to get more money for their money. They're not necessarily wanting to take Bitcoin and go buy coffee, but they're wanting a digital dollar and they're wanting more yield. They want more yield on their dollars. They want more yield on their dollars. And I'm telling you, you got platforms like Celsius Network that's paying 6, 7, 8, 9% on their dollars. Dollars that they can put in without fees, dollars that they can take out without fees. What's the writers of the article's agenda? Yeah, exactly. And that's why I'm saying, when I wouldn't be surprised if I get down to the end and these happen to be founders, co-CEOs or whatever of Dharma or Compound or the DY Exchange, something like that, right? So, but I don't know. I think the ultimate agenda, it felt like to me, was understanding that there's always going to be a demand for dollars, and that digital assets is a better way to provide that demand. I hope we can all forgive each other when Moon don't say money heals all. All right. So that's my thing. When Mullen, yes, definitely keep your ledger safe. I'm checking out you guys' conversation here. Right? That's right. All values, right? All stores of value are linked to that dollar. Exactly. That's exactly right. What a good read. I got to tell you, I'm really enjoying that article. It's my first time going through it, but I tell you, I think it's really hugely, hugely important.
I did some of my work.
Okay. I think it's hugely, hugely, hugely important that we note that this is, you know, this is a possible solution to the dollar demand and what's going on. And people are starting to recognize it. Right? Yeah. And that's the biggest push right now is you got Japan and the United States and probably Mexico, who are not willing to change from the dollar being the world's reserve currency. Now, I don't see the dollar going away. The challenge is whether or not the dollar, not the challenge, but what the issue is, one is whether or not the dollar is going to continue to be the world's reserve currency. I don't think the dollar is going away at all. You know, I don't think it's going away at all, but let me continue with this article. So stablecoin yields have historically been multiples higher than the Fed's fund rate, with the USDC stablecoin yields hovering between 4 and 10% APR for the most of 2019. It's also worth noting that crypto dollars themselves are beholden to network effects. As the ecosystem progresses, it's likely that only a handful will grow their monetary basis. Outside of Tether, USDC has become the most dominant stablecoin. So here's the other one: derivative-backed synthetic dollars. For most people, Bitcoin is synonymous with a few ideals. Many think of it as non-sovereign hard money, a fixed issuance currency that has value because it can't be debased. Others see and use it as a speculative tool, a 24/7 global trading market with enthralling volatility. A side of Bitcoin that many don't see is its ability to be used as collateral backing synthetic dollars, financial instruments outside of the purview of the traditional system that hold the purchasing power of the dollar. Phrased another way, Eurodollars. One of the easiest way to transform Bitcoin into dollar exposure is through futures, particularly the perpetual swap contracts offered by a number of cryptocurrency derivative exchanges, which gives speculators the ability to trade BTC, USD, margined, and BTC. This perpetual swap contract is structured like non-linear, inverse future contracts, meaning the contract value is measured in one currency, United States dollars, but the position is margined and settled in a different currency, BTC. As the name suggests, these derivatives have non-linear payout structures, given the value of the collateral is always changing while the position value remains constant. With a linear contract, for every percentage change in price, the same percentage is reflected in the P&L. But the inverse BTC contracts, convexity is relative, whether it's long or short. Okay, long and short, okay, got that. Long positions make BTC when the prices go up and lose more BTC when the prices go down. Borrowing from BitMEX Explainer, the following chart shows this relationship. It's the blue line is the P&L change. The red line is the linear percentage in P&L. Okay, I don't need to read that. Let's walk through a brief example. We assume one BTC is equal to $10,000. An investor in position of one BTC decides that they don't want to take on market risk any longer. They want to lock in the value of that Bitcoin without selling it for fiat on the spot market. The investor shorts 10,000 contracts through the perpetual swap, putting up his BTC as collateral. Fast forward 1 month, and the price of BTC is now 9,000 USD. The value of the investor's short position is still 10,000 USD because he has gained 0.11 BTC. Now let's say the BTC price has actually moved against him and is now at 11,000. Luckily for the investor, his position is still worth 10 grand. He just now owns 0.909 BTC. Okay, that's interesting. Not only can users create synthetic dollar exposure without incurring the tax penalty of selling Bitcoin for fiat, these synthetic dollar positions often earn a high yield because the Bitcoin market is usually in a state of contango. As soon as a synthetic dollar position is created, the user locks in a rate of return equal to the annualized futures premium. All right. So from the start of 2019 to today, holders of synthetic dollars have earned 6.3% rate of return. Yields are going to be a strong pull mechanism for crypto dollars. Okay, more on this below. All right. So the other one is hyper crypto dollarization. Using cryptos to get exposure to the dollar has been the untold story of the space since 2018. Fast forward to today, billions in crypto dollar loans have been originated, and billions of crypto dollars are earning an interest that far exceeds the yields available at the world's premier financial institutions. Better yet, crypto dollars are far easier to onboard and transact in compared to traditional financial infrastructures. With such rapid global demand for the dollar, it's very likely that cryptocurrencies actually further entrench its strength, ushering in a world of hyper crypto dollarization. So, what does this future look like? Which use cases will be crypto dollarized the most? Crypto dollars will grow the most from use cases that actively pull people in to the ecosystem away from the traditional world. This generally means use cases that are fraught with high costs, both transactional fees and opportunity costs of holding a different currency, or other use cases with a lot of counterparty risk exposure to the government. In more developed economies, yields are positioned to be the strongest driver of demand. While stable coin lending markets are not completely immune to global monetary policy, continued price appreciation should result in higher stablecoin yields, as it's still relatively difficult to move fiat dollars into the crypto world. Okay, prices increases typically result in a forward sloping future curve, which is one of the largest demand drivers for stablecoin loans, as it creates the most liquid arbitrage opportunities. Even with crypto markets selling off more recently, stablecoin yields are multiples above short-term US Treasury bills. Yields become an even stronger accelerant if crypto markets can actually perform well in the midst of global deleveraging, and stablecoin yields return to 5% APR. Another use case ripe for disruption in remittances. No, that's not right. Another use case ripe for disruption is remittances, primarily in countries with strict capital controls. Using Tether as a proxy for the dollar is already becoming commonplace in China, where purchasing more than $50,000 of a foreign currency is illegal. Many OTC deals who initially began servicing crypto to crypto transactions are largely moving their business to support both crypto to Tether transactions as well as fiat to Tether transactions. The remittance market as a whole processed roughly 689 billion USD in 2019. But even more important, it overtook foreign direct investment. This is one, guys. It overtook foreign direct investment as the largest source of foreign capital inflow. An average roughly 5% of transaction value is captured in fees and FX exchange margin, meaning 30 billion US dollar is captured by intermediaries. Wow. With enough infrastructure, crypto dollars are more than capable of eating into the margins enjoyed by today's remittance providers. Yeah, absolutely. I do like this. What does also say? Take for the man, lemon. To skirt around withdrawal controls, citizens began converting whatever cash they can into Bitcoin and Tether. Similarly, the Central Bank of Argentina began imposing strict restrictions on how much USD citizens could purchase just last year after the Argentine stock market and the peso fell precipitously. Since some crypto dollars are much more seizure resistant than traditional fiat notes, it's likely that they're used by citizens to flee their weakening home currency. So final thoughts. Counter to prevailing mainstream narratives, the new alternative financial system being created on top of crypto rails, the new alternative financial system being created on top of crypto rails is increasingly assimilating into, if not starting to, eat parts of the traditional world. The unique aspect is that the assimilation doesn't resemble what everyone else previously imagined. Dreams of the world ditching their fiat in mass in exchange for cryptocurrencies have been met with the same stark reality facing the entire global monetary system. Everybody wants dollars. Rather than squander the opportunity for ideological reasons like the Bitcoin maxis, the crypto industry should rally around this dollar scramble to onboard new users. I feel like Alex Mashinsky is the guy who wrote this article, because this is exactly what he says. Exactly. He says, why are you trying to fight the dollar and fight the banking system, fight that? The way to get more people into this space, ideally, is to bring them into this space via the stable coins and onboard new users. That's the key, because the vast majority of people still want their dollars. They don't want to go to the store and spend Cardano or Ethereum or XRP, but they do want more yield on their dollars. Now, unironically, that's an interesting word. Unironically, it is demand that spurs growth. And that's one area the crypto space has been lacking. What does a strong dollar and increased crypto dollar usage mean for Bitcoin? From a macro perspective, there's the argument that deflation induced by a strong dollar will be damaging to Bitcoin because the world perceives it as a risk-on asset. Well, that may be true, but it's important to conceptualize that a strong dollar likely leads to widespread currency debasement. And while the dollar is one refuge, there will likely be increased demand in general for fiat hedges. Even more, servicing this demand will only further prove that financial alternatives exist for everyone, as Bitcoin has all of the features necessary. And when they say Bitcoin, right, they're talking about the digital asset space, has all of the features necessary to be the most democratized store of value assets. So maybe they'll talk about Bitcoin, store of value asset. There's also a strong argument for inflation in the United States. A strong dollar undermines the Federal Reserve's ability to keep the global monetary system stable, which in turn pushes interest rates lower to combat deflation. As MMT takes hold and the United States government prepares to play a more dominant role in labor markets, labor costs could rise at the same time assets are buoyed by extra liquidity and foreign asset flows. Additionally, passive investing has seemingly distorted the structures that help keep markets and reality closely tied, making asset inflows the primary detriment of demand. If the government can issue debt to make sure your 401k deposits continue unabated, there's real potential for higher asset prices. In the case we do see inflation, expect crypto dollars to be used as a seamless bridge to non-debasable assets like Bitcoin. That's exactly right. And it's upon it. It's just a matter of time. Inflation, hyperinflation, it is not going to matter. In the end, expect crypto dollars to be used as a seamless bridge to non-debasable assets. Non-debasable assets. I love it, like Bitcoin. And so, guys, I think that is an absolutely great read. I really, really do. Very well written article. I got to tell you. Did that go? A very well written article. Shout out to those guys for making that happen. The Crypto Caveman, what's going on, my friend? Good to see you in the stream. J Corn says, see you, Siege. Be safe, bro. J Corn in the truck. I can listen again. Woo! Yeah. So, I mean, in the end, that's a great article there. And it is, for me, it just speaks volumes to where we're going. And again, one of the reasons why I'm such a big fan of Celsius Network, and I talk about and promote that platform, because I believe 10,000% this is where we're going. This is just where we're going, guys. People don't necessarily want to get rid of their dollars, but they do want more yield on those dollars, guys. That is the deal. And platforms that can provide that, to me, are the next big shot, right? Because remember, guys, Celsius Network is a platform within the digital asset space, just like Nexo and BlockFi, right? Just like Bitcoin, Ethereum, and XRP, right? These are platforms within the digital asset space. And so we can't forget that just because we are investors in XRP and in the greatest digital asset ever created, and some other ones that we believe that are going to win, that's just one part of the whole digital asset space. Where I've said this before, where are the other wins? First of all, what's the next digital asset? Do we know what that is? We all believe XRP is the greatest digital asset ever created, right? We say the champ is here when we talk about XRP. The champ is here. But what's that next digital asset that we can invest in and hold? But what's the other lane? What is the other avenues within the digital asset space that we can create cash flow as well? It's not just about the home runs, it's about the cash flow also. It's you understand what I'm saying? That's what I'm saying. That's what I believe a platform like Celsius Network is, because just like the people who wrote that article state, the demand for the dollar is not going away. The demand for the dollar is not going away. And we need to onboard more people into this space and get them to understand that they can't get more money for their money. Now, we want to get more Bitcoin for our Bitcoin, right? Because we are enthralled in this digital asset space. We want to get more Ethereum from our Ethereum. We want to get more XRP for XRP. And then we want to earn interest on that. We want to earn interest on our interest. But the vast majority are still stuck on the dollar. And with the dollar having the dominance that it has globally, especially, there's still going to be a demand for it. So people are still going to want to hold the dollar, but they want to have more yield on the dollars. That's why Celsius Network has they have the GUSD, they have, I believe, the AUSD, they got all these stable coins from different countries as well. So those people globally can earn more money on their money in dollars. It's genius in motion, I got to tell you. All right, guys, listen, it's been a great hangout with you guys. I appreciate you spending your afternoon with me today. It's been definitely want that interest, says CJ Jackson. That's what I'm saying. Definitely want that interest. I was just talking with Miss Crypto Siege earlier. I'm like, look, so tell me the amount of money, she's big on the savings, right? Tell me the amount of money that you're gonna put away, never gonna touch it, minimum of a year, never touch it, never. Minimum, never touch it for a year. And I'm gonna say, all right, well, we're not putting it in a traditional bank. That's not gonna work. Because what I do is cash flow comes in, digital asset space, like within 10 days, in digital asset space. Whether it's in a stable coin, whether it's in more XRP, whether it's in more on D-Chain, whether it's in holding some BTC for a period of time. Because what good does it do in a brokerage account? What good does it do in a traditional bank, traditional savings account or bank? Does no good. I mean, my God, it does no good. I mean, you could take $1,000 and a week later have more than 1,000 in the digital asset space, in and on the Celsius platform. I don't know what that interest will be. If it's in a stable coin, you got to take 6, 7, 8% divided by 52 to figure out what it'll be weekly. But my point is, if it's in the brokerage firm, if it's on TD Ameritrade or E-Trade, if it's in a traditional banking account like Wells Fargo, that $1,000 a week from today is going to be $1,000, not 1,000 and half a penny, not 1,001 cent, not 1,005 cents, not 1,010 cents, 1,000. Zero yield. Yet, since it's in the bank deposited, they're taking 10,000 and loaning it out to 10 different people at $1,000 or 2 people at $5,000. And again, the world is going to become more and more aware of what's really ultimately going on with their dollar, and they're going to want a better yield on it. And once they discover that there's a better solution for that dollar, I got to tell you, it's all over, guys. It really is. Thank you so much for hanging out, guys. I'm going to wrap up the stream like I do all of my streams and remind you guys of this. It was great to see all of you here in the stream, and that is old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.